Grow CFO is where finance leaders grow together. Join thousands of like-minded professionals using Grow CFO to access the combined knowledge and experience of the finance leader community. You can join us today, growcfo.net.
Hello and welcome to the Grow CFO show. I'm your host, Kevin Appleby, and this week we've got a returning guest, somebody from a very early podcast, Baz Bedrossian. Baz, the last time we spoke, I think, was in 2021, at which point you were looking for work.
Well, yeah, I had the time to have a podcast then. So, hi, Kevin, and it's great to be here as a returning guest. Yeah, last time, I think it was around March, April 2021. I just finished a 2-year role in a permanent role, which transcended COVID, obviously, and then started looking around for the next steps, and actually joining Grow CFO and seeing some of the credentials just made me think, and some of the people in there made me think maybe interim was the right choice, and started a career in this interim world, which has been quite exciting.
So 4 years on, is the interim world the right choice?
Absolutely. Absolutely. I think something that you can do at any time of your sort of professional career. I chose to do it in my sort of latter part of my career. But I suppose based on the risk profile of doing it a bit earlier and thinking mortgages, young daughters, and so on and so forth. So things are a little bit more relaxed in the last few years. Wouldn't say too relaxed in terms of the financials, but gave me that opportunity.
I think after I left big corporate as a management consultant, I dropped into working as an independent consultant. And you do get those nice gigs that are quite well paid, but the gig ends. And as soon as the gig ends, you ended it with I'll have a month off now. But on about day 3, you start thinking, but I better be looking for the next gig, because where's the next paycheck coming from? Yeah, so there is that uncertainty.
There is that as well.
Absolutely, yeah.
So I think I embarked on it around July 2021, joined a pretty niche organisation working in the NHS field and quite relevant at the time with COVID as well. And they did research and development within intensive care units and collecting all the stats. And I remember at the time being told the stats we give to the government, well, Boris uses it tonight on his chit chat to the public. And then I think as an interim, the number one objective has got to be, with the organisation's approval, of course, to find your permanent replacement. So I've been fortunate that in the 2-3 roles that I've had, it's taken about a year to find that permanent replacement. And obviously, you've got to hold the fort and make sure everything's running smoothly. And my second one was with the Housing Association. That was a real eye-opener. Again, relevant in terms of COVID, because unfortunately, they had some setbacks with, obviously, the impact that Housing Association just had during COVID. And then for the last year, coming up to literally a year next week, back in the corporate world. I've previously had some NFP experience as well in the permanent world.
Baz, one of the reasons that I wanted to get you on the show at the moment is we're doing a mini-series looking at non-profits and contrasting the difference between what you would do in big corporate, what you would do in a non-profit. How are they similar? How are they different? And I guess going into that housing association role, and you've mentioned back in the permanent world, there was some non-profit work as well. What do you think the big differences are between for-profit and not-for-profit?
I think the main difference, I think my strapline would be there is not a huge amount of difference. I think in both industries, cash is king. You've got to have enough funding, whether it's through private, public investment. You need that funding to continue as a going concern. I think the main differences are more to do with structure, compliance. I think regulation is a big factor, certainly is in the housing association as well as healthcare. But in terms of people, I would actually say, what's the difference between, and this is a question that I've always put out there for colleagues and consultants alike, what's the difference between a CEO in a not-for-profit and a CEO in the private sector? Obviously, I think there's a different skill set for public companies, but I would say not a huge amount in terms of the person. Obviously, sometimes there is a personal affinity to working in an NFP. I think examples in the past, people that I know working in an organisation I worked at where we worked very closely with 3 of the main charities in the UK, one of which was Alzheimer's Society, and found that senior management team at Alzheimer's had some personal affinity in terms of a member of their family, maybe parents suffering with Alzheimer's, and obviously put their sort of career path into a much more focused scenario. But in terms of the main things to do, I think the main difference, I would say, is compliance, regulation. It's certainly, I would say, a little bit more stringent in the NFP type organizations.
So did you find yourself getting more involved in fundraising, supporting fundraising in the NFP?
Yeah, I did. I think the first interim role I had in the healthcare sector, we were applying for grants, both on a UK and a European basis. And I found it quite a culture shock that as a senior finance professional, got so involved in the in the RFPs and the finances of how things were going to work, and right down to some of the operational questions about how many have we got in each team and so on. So yeah, it was a little bit of an eye-opener, certainly. Similar with the housing, actually, because sometimes you get grants from the council, and we work with closely. The Housing Association was based in Kent, and we worked with the council, obviously, to gain some rebates or concessions for some of the elderly residents.
So, Baz, there's fundraising, but then once you've got the grant or the funds, quite often funds will have restrictions around them to say, what can you use them for? So I guess that's another area that's quite different in accounting that you'll have come across in these organizations. How do you cope with that?
With great difficulty. Again, in the healthcare role, restricted funding for certain projects, you obviously could only use that funding for that project. And you also have to ensure that, it's quite detailed actually, in some cases, you were using a portion of a person's time on a project and you had to justify it. And you're obviously at risk of audit as well, because they have rights, the funder has rights for audit. I've found it a little bit more stringent with European grants, where we would apply for research and development projects. I would certainly say that it was an area, again, that focused my attention in terms of attention to detail. So yeah, it's absolutely an eye-opener.
In terms of accounting systems, how do you keep all of these restricted funds separate from each other?
Excel always does the trick, doesn't it, Kevin? We use QuickBooks for the healthcare organisation, and I use QuickBooks for my day-to-day one-man band business, and it's counterintuitive for me, and does have good, what I call it, responsibility accounting, where you can devise divisions and so on. But once you download everything into Excel, things become a bit more simple. You need that audit trail, though, in order to ensure that you've got the right cost and the right revenues in the right place.
That's actually interesting. And one of the things that I've done in a voluntary capacity, I was the finance person for our local sports centre in the village. And in a similar way to the bigger organisations and you've worked for in a paid role, we had grants from all over the place. And you were using QuickBooks, I'm using Xero. And I used Xero for the sports centre simply because I was using it for my own business. But like you, I ended up recording all of these restricted funds in a spreadsheet. Actually, until you get to a certain size, I don't think any of the accounting software suites can easily cope with that sort of accounting.
Yeah, I tend to agree. Yeah.
But as well as having to keep them separate so you can report back to the grant giver, you also report to Charities Commission and other people like that, as well as Companies House. How do you find actually pulling the results from all of those spreadsheets together into that reporting cycle?
Actually, that wasn't hugely challenging, because you're right. I mean, with the Housing Association, we actually, if I remember rightly, we actually reported, remembering my login, we actually reported via the FCA. So you have an FCA portal, and I think it's a housing portal, and we reported through there. In the healthcare organisation, we reported not hugely different to the corporates where you report by Companies House. So reporting through the Charity Commission I think there's some ad hoc reports you have to do as well. But yeah, it wasn't hugely different to the corporate side of things that we're all used to in terms of Companies House uploading and making it more digital, obviously, nowadays. But yeah, it was pretty similar.
So, Baz, in terms of KPIs, we're in a very different field, the sort of organizations. Did you find the sort of KPIs you're having to report on a regular basis different in the non-profit world?
Yes, and it depends on the organization you're working at. So in the healthcare business, there was KPIs that you actually reported to both the grant holder and also as part of the statutory process at year end. Obviously, most of them would relate to restricted funds where you have to give specific information, both in terms of cost and revenues and staff used. And within the housing association, lots of KPIs to do with, it's called void reporting in the housing world. And on the statutory format, it's actually called occupancy levels and so on. So lots of KPIs on the occupancy side.
So it's getting you into reporting on a lot of non-financial numbers as well.
Absolutely. There's a whole section on the housing association side where when I first arrived, I looked at the annual report. I thought, 50 pages or 50 odd pages. I'm thinking, God, that's like a PLC. But yeah, it's partly taken up because you've also got to give comparatives on previous years. And sometimes, depending on choice, of course, you can go back 3, 4, 5 years. I think the one where I worked at, we went back 4 years. And that had a change of system as well. So my predecessor had, I think my handover was a week. So I had to scurry around looking for the previous year information. But luckily, I had a good finance team there and some of the commercial people who had the information anyway. So yeah, non-financial KPIs, as you said, Kevin.
Yeah. Did you find yourself in a position where you had to deal directly with donors in either of those organizations?
Once or twice in the healthcare, yeah. Mainly via email, not necessarily on a visible call like this or on the phone. And mainly via email, just for clarity. And sometimes it used to be something as simple as, we're trying to upload the spreadsheet into your portal, but something's stopping us. And usually it'd be something to do with the columns in the wrong, the information's in the wrong column and so on. So, but less so than I would have expected. But because we had I think the knowledge with the healthcare organization I worked at was definitely with the funding team, the research team, and they dealt with the sort of the more visible side of the communication with the grant holder.
And I guess that therefore the CFO's role with donors is very much dependent on the quality of that more frontline team.
Yeah, absolutely.
Yeah.
And we had don't mind saying, we had a very strong team. Yeah. And I think that the guy who was the sort of research director, research manager is now joined CEO. So yeah, he's done well.
So you said early on, Baz, that cash, vitally important in profit and non-profit. In non-profits, you're trying to show that all the funds are going to a worthwhile cause and you're looking at dividends and so on, but cash still vitally important. How do you approach cash flow management in a non-profit where you've got all of these diverse and possibly irregular sources of funding?
This is something that I learned. Obviously, the principles are the same. Ensure that you've got sufficient cash for the foreseeable. The accounting standards describe foreseeable future as up to 12 months. But I felt that in terms of funding and reserves, you should have anything between 3 and 6 months in the not-for-profit arena. And you're absolutely right. Now that I'm back in the corporate, it's much more, I wouldn't say easier, but there is more of a sustainable factor in terms of predicting income and expenditure. But with not-for-profits, especially, again, back to the healthcare organization rather, it was much more difficult to predict cash flows, especially where you've got some of the grants being with restricted funds. We were slightly fortunate, and I say this with a degree of trepidation, we're slightly fortunate that because COVID was in its infancy or development stage in terms of 2021, 2022, the organization was best placed to help with some of those research projects and also some of the KPIs we provided to the NHS. So it was fortunate, obviously not for the wrong reasons. It was fortunate to be in that position because in terms of its financial impact, it was very much a positive financial impact for the organization because those processes allowed it to have much more streamlined cash flow than would be the case otherwise. So I'm saying that with obviously a huge degree of trepidation with what went on at the time.
So if anybody from a non-profit that might be relatively new to the role, Baz, what sort of tips would you give them on building a sustainable financial model?
Wouldn't it be a million miles off from a corporate to say in the first 30 days, obviously get to know the real mechanics of the organization where the push and pull of funding and the cost that its prominence. I think get to know the people, get to know the processes. Well, they say, don't know, people, process, technology, that's your first 90 days. So I think that's no different to any organization I've had the privilege of working at. I think they're different because there's a lot of compliance and regulation to be aware of. And I think as another non-financial factor, that's something to really get your teeth into. because I have found that in the not-for-profit arena, it is much more regulated, and for the right reasons, because it's funders' money. And
Yeah.
the funder could be anyone from you and me to organizations that are there for research and development reasons.
Absolutely. And as a donor, you probably don't want to find out that 90% of your donation is going on the CEO's executive perks.
Yes.
Only 10% is finding its way through to the good, worthy cause that you thought you were getting probably 90% of your money for. Yeah. So, Baz, we talked then that it's not that much difference. I guess the key thing that you've highlighted there is that level of reserves.
Yes.
Now, how often have you found when you're looking at grant funding for things that rather than getting the grant up front and then being able to spend it, you've almost got to spend the money first and then get it reimbursed?
Luckily, we were fortunate in that we would get a fair portion of the grant up front, and it could be anything from 25 to 50%. And obviously the rest of it on completion of the project. And sometimes actually 10% is left until certain conditions are met, but not very familiar with not having anything up front. So I'm lucky in that respect. So, and obviously in the housing association, it was much more different in that obviously once, whether they had concessions, residents had concessions or not, you would get the revenue a month in advance. I mean, ironically, it's not just a housing association we had a 50-bed housing for the elderly, and we also had 170 flats. So most of the monthly fees were paid up front. So cash flow wasn't a huge challenge in both organizations. Having said that, in the housing association, the challenges were more to do with ensuring to maintain the number of beds and the number of flats were occupied. We had some threshold levels in terms of the KPIs we described earlier.
Yes, must admit, I remember my frustrations that whenever at the sports centre we got a grant from something from the county council, one of the things that we used to have to do before the county council would pay anything out was show them the bank statement with the outflow of money from the charity to pay for whatever it was, which always had us in a position of almost robbing Peter to pay Paul, that you had a certain amount of money in restricted funds that was sitting in the bank as cash because you hadn't got it yet. So actually, there was always the case of, well, we've almost got to lend this money to ourselves until we get the money back from this other grant. So, Baz, you've moved on again from the non-profit world. What's attracted you back into corporate? Or what should I say? Back
in the profit motive world, both not-for-profit contracts. One was just over a year and the other one was around a year. And around May last year, when I finished, like I said, my permanent replacement arrived, did a 6-week handover and then left. And just when I was thinking, well, took a few weeks just to see what I want to do next. And obviously you use LinkedIn as your profile advert. So I did say looking for my next role, and didn't think that 6 days later, one of my ex-CEOs would call me up and say, let me run something by you. So I knew it would be a bit of a roller coaster ride, but a year into that project, which was originally supposed to be 6 months, and it's still going. So enjoying it. It's a finance transformation exercise. Let's put it that way.
Subject for another podcast.
That's currently taking place and enjoying it. Certainly taking up the hours, keeping me busy.
Thinking back to those two roles in non-profit, you ended up, as you said, you felt your objective was to recruit your permanent replacement. Was the role that you recruited that replacement for the same role that you took on originally at the beginning of that assignment? Or were you managing to evolve those roles to become more strategic?
I think in both roles, as I've previously, even in permanent roles, you make sure that you take the best of what someone's left behind. Yeah. And I was very fortunate that both the sort of CFOs, FDs that I'd replaced had left things in a really good place. Both chaps were semi-retired, so there was some personal reasons about why they wanted to slow down. I'm not quite there yet, so happily took over. And both of them, like I said, they've left it in a good place. And I think maintain that sustainability was my objective until such time where you hire a permanent person. There is a slight different, I did find out in permanent roles, I would go in and sometimes through inexperience try to change things too fast. I think we're interim roles. I think the big change is you should, unless there's absolutely a need to, like in the housing association, we upgraded the systems. We could have actually changed the whole financial system with a CRM system. But I thought that was best managed by a permanent replacement because they would live with it for a longer period than the interim. So there was a slight tweaks in thought process.
I think interim roles, Baz, fall into broadly two camps. There's kind of the role you've described you're in at the moment, where you've come in and the objective of the role is to do a transformation. Or there's the other sort that you've inherited in the housing association and the healthcare business, where effectively you're being a safe pair of hands for a period of time. And I think it's absolutely right that the safe pair of hands keeps things going, makes continuous improvement perhaps, but the real change then has to be for the permanent incumbent that comes in after you.
You're right. You're spot on. And I believe, in fact, I've kept in touch with at least one of them. Both permanent replacements are still there. So must be a positive thing.
Good. So you didn't hand them over a can of worms.
Hopefully not.
Baz, it's been fantastic catching up with you. I think anybody, looking to say, do I want to drop into an interim role from this permanent stuff I've been doing? Probably got a lot of encouragement out of what you've been saying today. And I certainly found it a great way of working after I dropped out of big corporate, and interesting to contrast the worlds of profit and non-profit and the different skills you've got to bring to the role. But are they that dissimilar to each other? I think there are some peculiarities in the non-profit world of all this grant funding, restricted funds versus non-restricted funds, and probably more stakeholders to manage because of the number of grant holders. But fundamentally, if you're a good CFO, it's not different.
There's more boards in the NFP. I mean, we had a main board in the healthcare organisation, had a main board, had a finance and audit committee, and then we had a risk and compliance board, which was very similar to the finance and audit, with, I think one of the members was different. We had the IT director in the risk and compliance. So there's certainly more regulation. Like I said, there's more compliance,
more regulation
and structured
regulation. So I guess once you take all those boards into account as the CFO, you've got even more stakeholders, therefore, to communicate with and keep happy.
Keep happy is a big phrase.
So, Baz, that opens up a whole new conversation. How do you keep your stakeholders happy?
Content. Let's say content.
Content. Yeah. So, Baz, thank you for being this week's guest on the Grow CFO show.
Thanks, Kevin, and all the best to Grow CFO. Thank you very much.